Hello and welcome to People and Profit, where we look at how business shapes our world. I'm Marcus Carlson. Coming up, assessing Abenomics is the Japanese government's effort to kickstart the economy falling flat on its face. Europe's steel industry puts up a united front, accusing Chinese manufacturers of unfair competition. Plus, what would you do with 1,000 extra euros in your pocket every month? We put the idea of a citizen's salary to the test. First up, though, Japan's economy ended 2015 on a sour note, shrinking by 0.4% in the fourth quarter. It follows years of so-called Abenomics, a set of economic policies championed by Prime Minister Shinzo Abe. Does the downturn mean that Abenomics is dead? Yuka Roya takes a look now at some of the key figures.
The announcement came as little surprise. Another contraction by 0.4% was revealed as analysts predicted more sluggishness for Japan's economy. The government played down the bad news.
We think that the fundamentals of our economy are robust and that the overall favourable economic situation remains unchanged.
It's the fifth time Japan's GDP shrank in the last 12 quarters, and analysts are starting to think that the much-hyped Abenomics has reached an impasse. Introduced soon after he won elections in December 2012, Prime Minister Abe's plan to kickstart the economy is based on three pillars: big government spending, central bank monetary easing and structural reform. Tokyo has taken bold steps along the first two arrows, spending massively on roads and bridges, healthcare and defence. Japan's government debt is the highest among OECD members at a whopping 226%. At the same time, the Bank of Japan has been flooding the markets with cash and recently took its most radical step yet in cutting interest rates to negative territory. But works along the third arrow, reforming the labour market and boosting the female workforce, have not caught up with the pace of the first two. Consumer spending hasn't quite recovered since plunging over a sales tax hike in 2014, casting a shadow over the next planned VAT increase in April. The newly signed Trans-Pacific Trade Agreement could boost trade, though the stronger yen may prove to be a drag.
For more now on Abenomics, we can turn to Supana Sa, Senior Asia Economist at the French bank Société Générale. Welcome to the programme. Now, what does the fourth quarter contraction tell us about the state of the Japanese economy? Are we heading for a recession, or are things perhaps not as bad as they seem?
Well, definitely the figure was negative, and so it was a very bad sign. But it doesn't put the Japanese economy into recession. It's made the whole economy growing at 0.5% for 2015 after a recession last year in 2014. So the economy is not in recession at this stage.
Now, what does it tell us, though, about Abenomics and how it's working in Japan? Is it actually working?
I may recall that we have 3 arrows, so it seems that the first arrow, the monetary policy, has been facing some challenges to reflate the economy. The inflation is still very low. The economic activity is still very weak if you look at the last figure. On the fiscal front, the flexible fiscal policy, which is the second arrow, has also put at risk the fiscal consolidation. The budget deficit is still minus 7% of GDP, and the public debt remains very high, around 213% of GDP.
Now, as you say, there are 3 arrows. There's fiscal stimulus, monetary stimulus. What about the third arrow, then, structural reform? Is that happening?
Well, definitely the third arrow, like the other 2 arrows, I think that it will take time to achieve what they call the medium-term objective, which is to have 1% of real GDP growth by 2022. So definitely more needs to be done on this 3 arrow.
So, in a way, Abenomics hasn't really gone the full hog, so to speak. There are still some things to do.
Exactly.
Now, the Bank of Japan has launched a negative interest rate. It effectively means that the banks are paying the central bank to deposit their cash at the central bank. What's the point of that? What is the Bank of Japan trying to achieve?
Well, the Bank of Japan actually tried to put some incentive from banks to lend to the corporate and also to to household rather than keeping their money in reserve at the central bank. So they want to put some incentive from them to improve the economic growth rate in the Japanese economy.
And do you think it's going to help? Is this a wise decision?
Well, I don't think that this measure will have a huge impact on the real activity because the negative interest rate has all been put on the margin of the excess reserve, not on the total stock of the excess reserve. So we don't expect a huge impact from this measure.
What is your outlook for Japan? Will the country be able to get its groove back with Abenomics, or do you think that we're still looking at a number of so-called lost decades?
Well, I think it's perhaps Abenomics just started or were implemented only 3 years ago. And since 3 years ago, the external environment has been very challenging for Japan. I'm talking about the Chinese slow economic growth rate. I'm talking about the weak oil prices. This factor doesn't help to reflate the Japanese economy. I think that they have to face many challenges in the next few years, in the 2 next years. So it will take time, and perhaps it will take longer than we expected.
Okay, so more heavy lifting will be needed in order to get the Japanese economy back on track.
Yeah, exactly.
Supana Sa from Société Générale, thank you very much indeed.
Thank you. Thank you.
Next up, Europe's steel industry is going through a baptism of fire. Losses are racking up and thousands of jobs have been slashed in the past 6 months. Steel bosses and workers are putting up a united front, protesting for their industry's future in Brussels. They're pointing the finger at Chinese manufacturers, accusing them of steamrolling the European market. The industry is calling for tougher action by the European Union to counter what they believe is unfair competition. They say Chinese companies are dumping steel in Europe below the cost of production. This at a time when China's own demand for steel has softened.
With 400 million ton overcapacity, it's not difficult to destroy an industry which has a consumption of 150 million ton per year. But that's why, according to the WTO, there are trade defense instruments. And those trade defense instruments should be launched, are launched, and should work and be sure that we come again to a level playing field, meaning that there will be, or there should be, import taxes on subsidized steel.
Let's take a closer look now at the challenges facing the European steel industry and that Chinese angle in particular. Stephen Carroll is here now with more. Stephen.
Marcus, let's start by looking at what's happened to the price of steel over the past year. This is how it traded on the London Metal Exchange, which is just one measure out there of steel prices. You can see it started the year at around $500 a tonne and finished at less than $200. Now, that's a pattern that we've seen across many commodities over the past year, but steel's plunge has been fairly dramatic. We've heard about this oversupply issue, and that largely comes from China. China produces around half of the world's steel. It's been increasing its supply steadily over the past few years and now makes 4 times as much as the European Union. But demand has increased over that period too by almost 60% between 2008 and 2014. The problem is that, along with the Chinese economy, demand for steel has begun to slow down. China has responded to this in 2 ways. First, by selling more steel abroad. Exports rose by 20% last year. But as debts pile up, China's steel producers are being forced to cut production too. The Chinese government announced a multi-billion-dollar plan to help reduce overcapacity in the sector. Industry experts say that the planned cut of up to 20% in production could put 400,000 jobs at risk. Now, globally, steel production fell last year for the first time since 1981. That'll come too late to help steel producers elsewhere in the world, though, who say that China accounts for more than half of the oversupply in the market. They've taken massive spending cuts and slashed jobs in the industry. European producers say that almost all of the 330,000 jobs in the sector are at risk if the industry isn't given more protection from Chinese steel, which is massively state-subsidised. Marcus.
Thank you very much indeed, Stephen. Now, what would you do if you received €1,000 every month for a year, no strings attached? It may sound too good to be true, but in Germany, an organisation is handing out just that sum of money to a handful of people. Participants are picked by chance, but it's not a lottery of the classic kind. It's a trial project to test how a basic income or a citizen's salary would work in practice. Haxi Myers-Belkin explains.
Judith receives €1,000 every month on top of her standard wage in exchange for doing, well, nothing. She's one of the latest winners of a privately funded trial, handing out unconditional basic incomes in Germany.
I use the money very concretely on paying the rent on my flat, my private health insurance, and then there's a bit left over for shopping, like for food for my dog, some music, and a bit of food for myself.
Recipients of the cash are chosen each month by draw, a fun gimmick with a serious intention to see if governments could replace complex welfare payment systems with one simple universal sum. And being unconditional, all paid work on top would actually pay. The founder of the German scheme, for which 34,000 people have so far donated money to fund 29 incomes, believes it will change lives for the better.
It takes the must out of the work. It gives people a way to live a life of possibilities and allows them to ask, what am I actually good at and what can I contribute to society?
Those opposed to the income argue that it will encourage laziness and be prohibitively expensive, a view disregarded by some.
What we found is that it is possible to finance such a concept. It would, however, mean a much higher tax rate.
While it may seem too good to be true, the concept of a universal basic income is gaining traction. Switzerland is due a referendum on the issue later this year, while an American project inspired by Germany is about to launch its first year-long basic income trial.
That's it for this programme. If you have any comments or queries about the stories that we've been covering in this show, you can get in touch on Facebook at France 24 Business, or you can tweet me at MarcusF24. Until next time, thanks for watching and stay with us.